If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hey guys, good morning. Welcome back to another live stream. Happy Friday to you. I hope you guys are well and ready for some action because we do have some coming. We've got the producer price index number coming out this morning, which does have serious potential to move markets. Let me not understate how important inflation readings are to this market right now. Also, let me just double check real quick, make sure that my audio is okay. I think it's good. Yep, good to go. Oil rocket ship. Yes, it is moving, man. Wars happening in Iran right now. Yeah, it is scary stuff here. You've got the Nasdaq down. Oil is up 3% as we speak here. My goodness. Oil is ripping once more. Of course, it's a weird thing because, why is it ripping? Not great things are happening. And so let's, from a humanitarian perspective, let's hope my trade hits stop loss real quick. But if I could just trail stops first, that would be great. But in all seriousness, yeah, so some craziness happening in the Middle East continues to keep geopolitical tensions high and causing some uncertainty here for the oil trade. Silver, gold also on the rise here. We do see some bullishness in the precious metals. The VIX is up 11% today. Volatility is still, I wouldn't say at a high point, but it's elevated. And, when you get a VIX above 20, you're talking about markets are going to be moving a little bit more. Not just the S&P 500, not just the Nasdaq, but, a wide range of different types of commodities, currencies, etc. The Nasdaq is pushing back down almost to yesterday's lows at the time of recording, or us right now here. You can see we are retesting almost that 1030 low from yesterday's trading action following the NVIDIA release that was, although I would give it a A+ score, it was a remarkable earnings report. The market was not happy with that. And so one thing you can think about is that if the stock market sees excellent earnings and it's still not good enough from the biggest company in the world, the question starts to become, then how much upside is there in the market? If earnings are the most important thing long term in the stock market. There is like no question. Second to none, corporate earnings. I guess the second place would go to the Federal Reserve's cutting or raising rates policy. But first place goes to earnings and projected earnings growth from the companies within the S&P 500 and the Nasdaq. And so here comes the biggest one with excellent earnings, excellent guidance, excellent revenue. And the stock market rejects it and says not enough. You look at that and you say, okay, what is good enough? And how hard is it going to be to get quote unquote good enough to get us to break through those highs? So I think that we remain in this funk. We remain in this funk of the stock market is demanding more, and that we are in. And I'm very curious to get. We'll have Chris Pulver join us here in just a few minutes. The PE ratio of the entire stock market, a lot of it has been going up so much because there's been an expansion in what people have been willing to pay for stocks in recent years. An expansion in what people will pay for companies because they feel good. They feel the Fed's going to cut rates, the economy's holding up. The geopolitical situation, obviously here flaring up a little bit today, but in recent years has been improving. The Russia-Ukraine stuff has at least calmed down. So you've had this scenario in which people are willing to pay a lot for stocks. But now it doesn't seem like people are willing to expand their risk tolerance on stocks any further. And so it's coming down to, are earnings good enough to expand the valuation on the stock market? And it seems like that is a much more difficult wall to climb than enthusiasm, right? So enthusiasm in stock market, I'm trying to explain this. Sentiment is a much more volatile thing in the stock market. Earnings growth is a little bit more predictable. And right now, we've already had a really big upswing in terms of sentiment, right? Generally speaking, people have been very optimistic. Once the tariff stuff kind of blew out and that finished, we saw a rush into very bullish perception on markets. People, I don't know if you guys caught on to this. If you're not a stock market person, you might not have, but people were reaching very high on the shelf for the most risky stuff, right? Stuff like BMNR, right? Bitmine, Immersion Technologies, Bitcoin, all these things. And now that sentiment has eroded away. We went from this euphoric bull market risk on rally to a choppy market where risky stuff has gotten sold really hard. Yeah, we'll take a look at oil. Don't worry. I would like to take a look at oil and gold as well. I'm just kind of recapping what's happening here this morning so far. Bitcoin is lower. And just a few minutes, guys, we do have the producer price index number coming in. That is going to be big stuff. Inflation reads are very important to this market right now. But just take a look at what this market is telling you right now. The market is telling you right now that geopolitics are in full swing. You have silver breaking out, or at least attempting to break out here at this 91.85 level. Gold is also just shy of its recent highs here on the 4-hour chart. Gold is strong, silver is strong, and oil is ripping here to the upside, up 3.25%. I am still long. I do need to probably trail a stop loss here today. This one's been such a wild mover. So I went long, just a bit of an update for those of you guys who aren't in the Discord. I went long oil over here. It was a really, really good entry for me. We ripped higher. And then what I did is I trailed my stop loss and I got stopped out. And then when we had this V-shaped move back off this area, I decided to re-enter the trade right here. So I'm back in my oil trade for a second position. So I took one trade that was profitable. I re-entered after this display of strength. I just love that V-shaped recovery move was really solid. And I still very much like the macro fundamentals for oil. By the way, real quick plug, we just added to Edgefinder yesterday individual currency indices. So US dollar, many people know this as like DXY, right? Or for Japanese yen, it's JXY. We just added these to Edgefinder, and I knew that these things were popular, but I did not know how popular they were. We had a huge response. A lot of people were really excited about this. So I published this inside of our Discord. But yes, we added, you can also go under asset scorecard and you can select US dollar and or the other ones too, right? So if I go asset scorecard, check this out, kind of fun. You've got the Swiss franc, the Canadian dollar, the Aussie dollar, the British pound, US dollar, obviously, New Zealand dollar, etc. And what this allows you to do now, the reason we did this is that you can now within EdgeFinder, if I want to take a closer look at the Aussie dollar, right, I can now take a look at the Australian dollar in isolation. I can look at economic growth metrics. I can look at inflation metrics, technical bias, institutional activity, not on a currency pair of Aussie dollar versus something else, but rather the Australian dollar versus the rest. Does that make sense? We just added this feature. It is really exciting because a lot of people, clearly you guys, the currency traders in the room, are cheering this. I'm glad to have added it. We've been working on it for a couple weeks now, and I'm glad that it is ready. But yes, just taking a quick look at what I was going off of with oil. So oil is there for me in terms of the reading, right? I've got everything check marked that I need. Technical reading looks solid. EdgeFinder scores overall +7. Technicals look excellent, like really, really strong for at least momentum right now. We may be tapping into some higher time frame resistance levels, so I'm going to probably trail a stop loss on it. COT data has shown, at least, we'll get new data tonight, but institutions are very long oil and recently added to it. I'll be curious to see if they add again here this week. We get new COT data tonight. That's why I'm referencing this. Fundamental score, consumer confidence came in better than expected. Today we have, in just 4 minutes, we have the producer price index number, which of course, inflation read will potentially impact scoring for oil. Last time around, it came in higher than expected at 3% compared to 2.7 expected. So we'll see this time around today in 4 or 5 minutes if this number improves the score for a bunch of our stuff. If you get cool inflation, of course, risk assets like that, etc. Way more convenient. Cheers. Yeah, glad to have it there. Again, that was some of our affiliates, people who, you know, a lot of you guys know them on the stream here. The other content creators requested this stuff heavily. Like they wanted to be able to look at, you know, the Canadian dollar in isolation and have all the data mapped out in front of them. Or, you know, obviously the big popular one is the US dollar, but having all of this data scorecarded for the currency traders, we got you. Don't worry. We will, you know, the one thing is if you've owned the EdgeFinder, you've watched it morph and improve the whole time. And we won't stop because we just have too much fun building new things. PPI can change from bearish to bullish. Yes. For oil, in terms of potential score impacts for the EdgeFinder people, yeah, it can't get any lower score for that category for oil, but it can get higher because last time it disappointed, meaning the producer price index number came out high. This time it can only go up in score. It can't go any lower. Hey, Nick, I saw one of your videos. EdgeFinder had a black background with red and green. I like it way more that way. So that's not the EdgeFinder. That is the stock box. And I think the stock box, I don't know. I go back and forth. I think the stock box might look cooler than EdgeFinder, but I don't want to admit that because I've spent countless hours working on the UI within EdgeFinder. So we're going to not address that. But I do think, I think Stockbox looks pretty dang cool. Like in terms of colors, Julie behind the scenes, she did a great job helping us with picking out colors. I mean, this thing looks, it looks pretty cool in my opinion. The colors we chose, the greens, it just looks very stock-esque. So sorry, Nick, but I think it looks better. Yeah, I mean, I think it looks cool. Hey, I use the stock box every day too. So no shade. Guys, we've got 1 minute to go here. What I'm going to do is I'm going to just switch over to, let's switch over to our all markets view. Wow, look at this, guys. We have stocks lower. And in just a second, we'll bring in Chris Pulver. Once that news data drops, we'll bring him in. And I'm very curious to get his thoughts on some of this stuff because I know he's been busy with some of this elevated premium that we can be collecting here on the higher VIX. 30 seconds to go, guys. We've got, just for your audience convenience, we've got S&P, Nasdaq, Dow Jones, Bitcoin, dollar index, gold, silver, oil, all on the screen right now so that we can watch the reaction here. Again, higher inflation is going to be risk off. Lower inflation is going to be risk on. Let's see how this comes out. We've got just about 5 seconds to go. See how this impacts our charts this morning. And then, of course, don't go anywhere, because once we get this move, we will also reflect on how it impacts charts going forward. So initial jolt higher for the dollar, S&P and Nasdaq hitting fresh lows for the daily session. Gold is continuing to stay elevated. But again, I think right now, one thing I would say that's going to throw some confusion in right now, a lot of geopolitics are taking place as we speak. I obviously don't have boots in the ground. We're not a CNBC. We don't have like reporters sitting in Tehran right now. But I am hearing, of course, that there was some negotiations that did not work out very well last night. Oil prices obviously reflecting that here. Probably the strongest chart on our screen right now is the oil chart. It is ripping here. And so we did get, let's take a look. What was the number? 3.6. Let's see. What do we get? Let's see what that number is. We'll bring in Chris Pulver. Hey, Chris, how you doing, man?
Good morning. How are you?
Good morning. Doing good. Okay, so just reading this PPI number. So year over year came in at 2.9%, guys. That was higher than expected at 2.6%. So obviously dollar firming up on this. Meanwhile, of course, not as good for stocks and risk assets. Chris, how are you thinking about all this stuff? I know you probably, I mentioned it a second ago, you're probably busy with all this activity going on, this volatility. You got Nas down 0.8% again today.
Yeah, we're getting some pretty big gaps to the downside. How's the audio, by the way? I'm on headphones today.
It works.
Does it sound okay?
Mm-hmm.
Okay. Well, VIX has been going up all morning, fresh lows on futures. I'm just setting some chart alarms on the VIX to see if we actually get back up to 22 or 23. I don't really want to call the bottom today. I mean, I have some decent gamma levels on S&P down to like 68. We're already opening up probably 0.9, or I mean, we might even push to 1%, Nick. We might push 1% lower, which from yesterday's close, 1% just on a gap. I mean, that's a pretty substantial gap. Now, I mean, I do think that at some point this gap is going to fill, but if this is just push, like open lower and push lower, like futures have been down all morning, SPX, CFD down all morning, I'd be curious how low I can go. I mean, a lot of these contained moves, think back to November 20th, think back to October 10th. Those are 3% intraday moves. So
Yep.
If we went, S&P, let's go 3%. I know that's a hardy drop, but let's say that the market could find, 6,700 today. If I'm selling puts intraday, it's going to be down there. It's going to be like maybe setting up some butterfly trades, trying to catch something with a profit trap around that 3% handle. Stay out of the way. And the VIX isn't crazy high, but if we reach 22, 23, I mean, we've had a flare up. I'm trying to think, what was our highest VIX since like November? Was it like 28, 29? That was about the highest VIX we've seen the last several months.
Yeah. So, well, back in November, you did get back up into the 28 area, like you're saying, but this year,
28,
so far,
30, I'm showing.
Yeah, high of 23 this year. Chris, what do you think on volatility? Do you think if we get, is there a levy break here if you get above like 24? If you start seeing, how quickly, if we go, I've heard people talk about this before. If you get like a break into the mid 20s, it can very quickly jump into 30s.
Yeah, no, I agree. And to look left and see at 28, 28, 29 VIX, there's enough real stuff going on right now that could be the case. I mean, we've had reasonable volatility containment at that 23 handle. But if we push up above that, it's like, we just know that when there's no volatility suppression, it can happen so fast. And it is end of month, and it is February, which usually like February kind of slides a little bit. You have like the Ides of March in the stock market, which is like the first week of March. So again, structurally, this is just looking at the key support. I mean, we've been in an 11-week range, lows around 6,800, but the pinpoint lows around 6,775. Let's see what happens today. But I mean, opening up almost 1% lower is certainly not going to make the tone great. And we just talked about PPI coming a little bit hotter. That's probably not a good sign. What's the Truflation reading this morning? Let's see some third-party stuff. Truflation. I saw like sub 1% yesterday. Crap, I can't pull it up on here. What's the aggregate? Do you have Truflation up by chance?
I can see if I can find it. Hold on.
Let me know what it is. It was like, I think it was under 1% yesterday, or maybe it was like back up to like 1.07 or something like that. But that was a drop from, essentially 2%.
Yeah.
So, or 2.7.
I don't have it either.
Like
I don't have a log.
All right, no worries.
Yeah. Anyways, yeah,
Okay.
I mean, Chris,
so,
that's
definitely hotter across the board.
The question is, you have a couple things here all hitting at once. And, when you do get market downturns, that's usually what it takes, right? Because the natural inclination of the market is to drift higher. What it takes for the market to go down is usually some kind of perfect storm. And the question is, do we actually kind of have something forming here for at least in the short run, maybe a little downside? Like, for example, I would list a couple things that are pretty concerning right now. One of the top of the list ones for me, Chris, is NVIDIA's earnings response. The earnings were incredible, like A+ report, and yet the market rejected that. Expectations very high. At the same time, we have obviously the US and Iran stuff is just a wild card of uncertainty. We also have the is Trump going to flare up some kind of flex his muscles on the tariff? The Supreme Court shot down stuff. That's also in the background. We have midterm elections. We have February going into March. Historically, not a great time. Look, I mean, I'm not someone who I don't like to short the market unless there is a very clear technical bear trend going on, and I don't see that right now. But I see and maybe one of the biggest ones is we've talked about re-rating earlier. I was talking about this earlier. One of the easiest ways for the market to go up or down a lot is speculation, sentiment, and re-rating. And right now we have a drastic one happening in software. So you have this thing where it's like you need a lot of things to flip more positive for, in my opinion, this market to actually be able to hold some gains and start moving higher. I would love to see it. Like we talked about yesterday, if we start to get some kind of technical break to the upside on the S&P, if we get some solid breakouts, maybe, for example, this US Iran stuff, that to me is the quickest one that could be stopped. I hope, from a humanitarian perspective, I hope it gets stopped. If that takes place, that could very quickly be, a positive. But you also have inflation hitting high points here this morning. It feels like right now you have the recipes for a little bit of a cool off. Maybe Nasdaq is headed back down to these levels. I wouldn't put it past the Nas. We've been really choppy. Very quickly, could we head back to the bottom end of this range amidst all of these things taking place at once? Sure.
I mean, it's we've been climbing the wall of worry all year, and the indexes have gone nowhere despite the turbulence and the chaos with the dispersion trade underneath. Now we take something external instead of the dispersion trade with software disruption in the US. We take some of the external, like Pakistan and Afghanistan. We take the talks in Iran. We take a rise in oil prices. We take I'd say negative price reaction to NVIDIA despite the solid earnings. It's just kind of showing that NVIDIA is a great company, great margins, but it's still a rotation story because I think it has to be. I think you're too concentrated still in Mag 7. Money is finding a way to leave. I think that right now people are looking at fixed income vehicles, dividend stocks, defensive stocks, lower beta, less volatility, trying to kind of, I mean, think about how much tech exposure the average stock investor had from last year. It has to be volatile, even though the indexes are down a couple of percent or flat for the year. Tech exposure to see swings in your portfolio, 20, 30, 40+% swings. It can't be fun. So I think a lot of investors are fleeing that space to kind of, steady the waters or just calm things down. So
Chris, we've also got to just real quick, just to go off your point about, fixed income, we are seeing a pretty good bid here on bonds. Take a look at TLT trending higher here this morning on the 4-hour. Yields are lower. Crypto is lower. You are seeing this kind of interesting rotation. You also have silver up 4.3% now. So precious metals on the run. Dollar index is flat here today. VIX up 15%. Definitely feels risk off today.
For sure. And just on that note, let me go to gold and silver for a second here. So gold, I mean, sure, for scalpers, yes, I'm still not overall convinced that gold's going to make, clean breaks to the upside with much punch. I think that if we revisit 5,600, okay, fine. I still look at that, call me old fashioned, but a 200-day moving average hasn't been hitting 600 bars. I'm just waiting for that to make sense before I start to throw in some more trades. Silver, same thing. Near term, yes, but to me, this is high, low, lower, high, lower, low type situation. Just let this kind of calm down as a pattern. Risk off Bitcoin. I mean, Bitcoin caught a bid this week, a little bit off the lows at 60K. I still don't necessarily think that low is safe. I think we're gonna, probably watch either some falling wedges or some divergent bottoms. Where be careful picking the bottom on Bitcoin. I mean, if you can see my chart here, all I'm looking at on Bitcoin is just wait for this trend line. Don't be a hero. Don't try to call the bottom. If you're dollar cost averaging to Bitcoin, that's fine. I just have no idea where the bottom is. We are at a trend line support already. If we break that level, we better break and pop right back up. To me, that's at least a sign the bulls are still present. Otherwise, if we break and create more of like the kind of the H bottom, which is, we break, sideways, break, sideways, break. Don't catch that bottom. Today, I think I said this yesterday in the session, Nick. The IGV trade, my keyboard is your delete button. Let's go to IGV. We had a short-term bid yesterday, going up to about 82 and change. We're back down to 80 today. I put in trades. I have trades today. CRM. I have a broken wing butterfly sitting down here at 175. We're trading at 191. If we have like an aggressive risk off day today and these software stocks come right back to revisit lows, I'm sitting there waiting with like a $250 to $500 profit trap on CRM and Microsoft, which is down here to 382.50. That's where I want it to be for my profit trap. So that drops like $10 today. That'd be interesting. Oracle is another one. My profit trap is around the 135 handle. And then on Palantir, I think it's the 125 handle on Palantir. So we're already at 133. I don't know. I'm curious if we have some follow through on the downside today. We kind of revisit these recent lows. Today could be some good timing for that because I have a couple $1,000 worth of profit traps sitting there. So we'll see. I definitely don't want to force trades today. I mean, when you're coming into the market at almost a 1% gap lower, I wouldn't call that bottom. I think that if we hold structure, I mean, look left, structure for today is going to be around that like 6,800, 6,775. It's end of the month. This could, lead into a little bit of a bleed from like maybe we finished the month sour on the S&P. The week has already been, it's now red because of today's price action. It was totally indecisive as of yesterday. The month so far is a red candle for the month of February. Is that a, sell off in March is more like we start off March on a rough patch just because we're ending February negatively. We look at this monthly chart, there's still a lot of pullback potential. It's just a pullback. I wouldn't necessarily be bearish, but it just, when you zoom out to a bigger picture, this is what kind of keeps me sane of like, okay, this market can pull back and certainly give us, look at easy numbers like 5%, look at 10%, look at 15%. That's not really doing any major damage to this overall still bullish market.
Yeah, and I think that's you kind of need that every once in a while. We've talked about this before, in the precious metals, you need that flush out. And maybe, Chris, that flush out, at least where I'm seeing it in terms of, the way I'm analyzing stuff, I'm looking at the macro quite a bit. And I look at oil as maybe that the cockroach, right? Where there's one, there's many kind of concept. I think oil breaking out here to the highs and not resolving, they keep coming out every day. It's like, hey, we're really close to a deal. And then things sour overnight. And it's like, you have this trend here that is taking place geopolitically. And nobody knows where that's going to, I can't tell you how things are going to happen over there. I have no edge in that regard, but I know the momentum here. I know the chart price action is looking really strong for oil. And, I also look at put call ratio here quite a bit. I was looking at oil here just a second ago, looking at USO specifically. You can see we've had recently a huge surge in put contracts traded. So my thought here is, okay, there was a lot of put buying that took place, a lot of speculation that oil would drop. That is not taking place. We may be seeing a little bit of a squeeze to the upside. We've also aligned this with what we've been seeing on a trending basis from the COT report. We've seen institutions continue to stay long and accumulate more on the oil long side of things. So to me, that is the trend that's taking place right now. We've also talked a lot about energy stocks on the rise here. So I think that there's a little bit of a trend there, and that is putting pressure on equities. As you pointed out, you pull back to a higher time frame chart, and you just say, okay, we could still very well be in an upward trend, except we've been on this heater for some time. It could be completely normal that we get a move back down to 65 or 6,200 on SPX, and maybe base out and rally from there.
Yeah, and just talk on your oil trade. I'll try to talk it up a little bit more. Let's say, I mean, oil is always a slippery trade unless you're trading what you see. I think that, technically speaking, I could almost see oil doing something a little bit crazy. Let's say this escalation continues. I could see oil really squeezing up here towards, $80+. I would be willing to short oil if we go from like so let's say we get to like $80 on a flare up.
Mm-hmm.
If that doesn't immediately squash back down, 80 flares up to 90 to 100, I would sell again, define risk. I would be selling to these levels thinking that we probably top out and then come back down. But I would not be calling tops here. So the trade that I posted for Pulver Alerts, which was going to be like a 1-to-1 iron condor, I am canceling that position. I don't want to get stuck on some squeeze higher.
Yep.
So I'll post that update in the alerts. But if we break above 70.75, we've had a couple of tests there. This would be a decent structure break. I think there's room to kind of flare up. But oil is also very quickly to be contained. Like nobody wants to see oil prices $100 because it's then a geopolitical risk. Nobody wants to see oil at sub $50 because it's not profitable. So there's always that backdrop with oil being like we have to kind of keep things contained in order to just keep the global economy humming along without major price disruptions.
There's an
and
interesting
inflation flare-ups.
There's an interesting thing on the oil and gold contracts. I'm sure you know this, Chris, of course, with the option side of things on oil and gold.
Yep.
They have a lot of premium on the call side at pretty much any given time because the market is smart and knows there's no free lunch, and that oil and gold have at any time the potential to have outrageous moves higher on geopolitical breakouts. It's stuff that, when we're talking about the stock market, of course, there's stuff that can impact it, but it's pretty efficiently watched in the sense that, earnings and analysts can really predict that stuff pretty decently well. But some attack happening over in the Middle East or some agreement breaking down between two major sovereign nations, that stuff is very, very hard to predict. And so in the options market, there exists a premium on the call side to assets like oil and gold, which can drastically move higher suddenly. Now, as technical traders, I like what you said there about trading what we see, right? Like right now, oil, I cannot predict what geopolitically is going to happen next. And I won't even try to because there's no point in me trying to do that. But I can tell you price action is getting bid every time that we get some kind of low here. And I do see that potential blowout move as a distinct possibility. And in a weird way, it's almost like we've talked about this with the VIX too. These blowout moves, these like giant candles, they almost happen uniformly after they've already been going up. Like you get these huge moves. It's very rare that you get this kind of move that we saw in gold, where it's like screaming up and then screaming down the next day. But in commodities, it can happen, right? So these commodities where you can have oil, up huge, and then you're like, oh, that's got to be topping. And then it's like, boom, it rips another 3 days in a row. So I think that the market may be pricing in a little bit more risk premium there right now.
Yeah, I don't disagree. And it's not something I want to step in front of. I mean, I think it's silly to call a top in oil. I think it's silly to short gold or silver. I think it's just waiting for entries. I'm trying to think so honestly today, VIX at 20 and change. I'll keep an eye on this. I'm probably going to do a wider bull put spread on SPY, QQQ, DIA. Look for those in the Pulver Alerts. I'll probably go 50 wide and try to pull in $200-300. I think that's fair. I might go 100 wide and pull in $400 or $500. I think those probabilities of profit are high. I also think I'm willing to own shares. Guess what level I'm going to use, Nick? What's my level when I'm selling premium? The April 2025 lows.
All right.
Like I'm just going to go all the way down there, go 50 wide or 100 wide, sell some premium. And, this has been, again, to be fair, it's like, it's hard for the VIX to be at 20 and stay at 20. Last time that happened was 2022 when we had, lower highs and lower lows. That peak to trough, by the way, was about 35%. the April 2025 lows from current price is about 34 to 35%. So I could essentially experience a 2022 type decline and not take any assignment on anything. So we'll see. I still think that there's going to be some, heavy jawboning on whatever this is. I mean, if we do break structure on the S&P and we get down below 6,800 with some conviction, we get a simple breakout to like 65.50. We look left on the chart. If it gets really ugly for a second, 65.50, if that level doesn't immediately hold, that's that October 10th and November 20th candle. Then we're talking maybe a flush into like 62, 61.50, 6,000 round number. Like, I'm a buyer of all those levels. I'm taking some stabs. I think that this market just, at least for the index side, like, let's get some breakouts. Let's get something to go somewhere. Let's make it a little bit more interesting that we can position for, hopefully something bigger picture, because like I'm showing here on the chart, I mean, this area, if we break to the downside, okay, there's structure. If we break here, there's lots of support. If we're down here, I'm still a buyer. Like, I'm buying. And again, when we have a day like this where it's like, oh my gosh, the market's going to be down 1%. Everyone, it's like panic sets in. It's like, how low does it go? We just can't be surprised to see the market give us 5 to 10%, and it still offers a buying opportunity. Because if you look back in hindsight, you're like, I was scared. I was buying puts. I was trying to hedge myself. It's like, it's too late. When it's time to hedge, it's when the market's been doing nothing.
Yeah.
When the market's sideways, it's like I have hedges out to 6,000. I have hedges down to 5,500. I have hedges down to April 2025 lows. I have hedges, and I've been doing that since the market's been going up. I think those hedges are mostly throwaway trades. I told you this week, like, I'm pretty bullish up until like the midterms this year. I think that going into like September, October expirations seem pretty solid. Buying the dip until that window, and then things for the U.S. especially get a little dicey. I also wouldn't be terribly surprised to see the U.S. just continue to be like this resilient, like, wall of worry climber, but not necessarily, pushing 15, 20% higher. Meanwhile, the world does okay. If you go, you can go all the different ETFs. I think somebody was telling me that Poland ETF, EPOL, was one of the best performing European ETFs. And I think it shows here year to date. I have to take that back, 6.8%. Look at this, up 145% in the last 3 years. I still like Brazil. So it's EWZ, EWJ is Japan, ILF is Latin America. Are you in Vietnam still? You told me about Vietnam. I'm in Africa, which is AFK, but do you have any Vietnam trades?
I don't. I've been watching international stuff for pullbacks, but I have not quite gotten into it now.
All right, I'm in AFK. It's up 13% year to date. That's not terrible. EWZ is Brazil. Year to date, it's up 21%. Those shares are doing pretty well. ILF is Latin America. Year to date, up 19%. So I picked a couple ones. Also, those are heavy commodity ETFs. I mean, everything that happened in Venezuela, I mean, they're getting a bit of a push there. I still think if you zoom out on Latin America and Brazil, there's still plenty of upside here. This is Latin America. I would not be opposed to watching this thing get up into maybe $50+. Brazil, look left on this chart, and I would not be opposed to this thing going up into $80+ from. I mean, we're less than 40. We have like 100% upside. We're not even all-time highs. So we'll see, man. I mean, that could be way more speculation, but when I bought here in the low 20s, I'm gonna ride these things for a little bit longer. I will sell premium in the U.S. Let's see what happens. The futures market did decline a little bit, or at least we bounced off the low slightly. Let me go into short-term futures. I see that we were down like 0.96, and now we've retreated. So it looks like we're catching a tiny bit of.
I'm curious, Chris, on the New York Open, when you get to that 9:30 Open, how this all kind of, because that's always the tell, right? You have like the pre-market moves, and then the heavy volume comes in, and it kind of actually gives you the bias, right? Because sometimes you get that 9:30 Open and we rip hard off of it, and other times we kind of we see some big selling come in. And that's of course, for listeners, that's going to be in 35 minutes here. We'll have the U.S. stock market open, which can often lead to a surge in volume, or does lead to a surge in volume each day. So we'll keep an eye on it. Dollar index is remaining decently firm here. You're still sitting just shy of this resistance point that we've been sitting on the last few days. And then at the same time, if we take a look at some other pairs or other currencies, we've got JXY kind of doing whole lot of nothing here recently, back and forth. Crypto, we already talked about. consolidating still near its lows though, and just can't really seem to get any sort of sustained bid. It's like every time you get these one-day rallies, it is met with this like slow, killed off, selling that goes on in the following days. So that to me signals still risk off flows kind of prevailing right now. When you have risk on days that get met with gradual selling, that tells me there's a persistent bid there, or a persistent ask, I guess. The sell side just keeps coming in and pushing things back lower. Pound dollar continues to move lower. I do have a short position on pound dollar. This one's actually working out great. I went short a couple days back, took a little heat initially on the trade, but have rolled over, took the first profit off, and I'm looking for another move lower if we can get it down on the British pound versus US dollar. Euro also kind of mixed here this morning, and just taking a look at some yen pairs. Euro yen, nothing too interesting. Pound yen, of course, lower. Pound has taken on some water here recently. Aussie yen, Kiwi yen, Swiss yen. Swiss yen is up here today. Euro pound also up a little bit.
That trade, Swiss yen is going to be the death of everybody, I think. I heard an interesting session on the Swiss. I just think that since 2015, they just stopped caring about the currency. I don't think they're trying to peg it to anything. I think they're just letting it roam. I think they're not trying to intervene, which is why we've seen like a multi-year strength bid on the Swiss. Swiss yen, I mean, if you look at the daily, weekly, I would like to say at some point it's a good trade, but there's no reason to ever short this thing, even though it's positive swap barely. There's no reason to short this until you have like an obvious price pattern. I think that give it time to get on the right-hand side of this trend line, give us a price pattern. I think there's a lot of unraveling that can happen. But it's like, Nick, do you trust the Japanese yen to have that type of sustained move without a crazy risk-off event?
I just don't right now. I think the yen is just a hard one for me to bet long on, unless we get some sort of, it's kind of like bonds here this morning. Like if you suddenly get this massive surge in bond demand that we just haven't had in a long time, by the way, maybe that's the same environment where the yen gets a little bit of a bid, in the sense that maybe it's just a risk off rally and people go to the Japanese yen for the relative stability in their economy. Maybe, but I just, I think I'm more in the thought process of a slow, healthy pullback in prices, not necessarily a crash. I still think you have a lot of positives going for this market. I'm just more in the camp of cautious, because I think we've had such a wonderful run up to the upside. We've had a lot of new headwinds that are kind of taking place. And I think that the market will have to work through some of that stuff in the here and now. And so I kind of lean thinking we could get a little bit more dips, and I'm going to stay ready to be buying those dips. I'm not looking for, a big short that I'm trying to capture some giant downside move. I'm more in the camp of, all right, I see a lot of stuff that's given this market trouble, and I would love to see some dips, in which case I think the risk reward starts to become better.
Agree. Well, it's 30. I mean, probably at 9:31, I'm going to have some puts that I'm selling on SPYs, on the SPY Qs and DIA. Qs, I'd probably go a little bit, if the premium is decent on the Qs, I'd probably go a little bit lower than the April 2020 lows if I can. Willing to own them, but between Russell, I'm probably putting a lot of the expirations September, October. Let's see what I can get for them, going anywhere between like 50 to 100 wide on some of those spreads. So I guess, that'd be about right. We'll see what the risk is. I'm hoping to make, anywhere between $200 and $500 per trade. Just another little stacked income trade. I do want to see what those IGV related trades do. So CRM this morning, Microsoft, Oracle, Palantir. If we come back down to those recent lows and we do that all today, that make for an interesting Friday profit trap for me. So, again, in 30 minutes, the market also might just bottom and neutralize. I mean, what's crazy to me is looking at the broker platform here. This is Tasty Trade showing today's expected move. Even with the VIX at 21, the expected move is only 45 points. Now we're already getting, we're showing like a 0.8 to 0.9% gap lower. So you mean to tell me that we gap lower, have a 21 VIX, and we're only going to move, 40 points? Like we moved 80 points yesterday when the market it sold off and came back up to neutralize today. But something tells me we could have some more volatility swings today. So I don't know, just be careful. End of the month kind of shenanigans. We'll see where price ultimately gets. If it still can't break below 6,800, it's just the same thing. It's just a bunch of noise. I said that yesterday. Everyone's asking me about the war in Iran. It's like, what? It hasn't happened yet. If anything, the U.S. is probably not wanting the conflict. It's just that, the talks are ongoing and it's noise.
Yeah.
But the stock market overall is about earnings. The stock market overall is, I think we talked about this yesterday. It's like nobody really knows what the Fed chair is going to look like come May. Like when Powell officially steps out, Warsh is in. Nobody really knows what that vibe is going to be. It's like, so between earnings, if we need an earnings compression, that could reflect in stock prices.
Yeah.
If Warsh comes in and maybe hints that they don't need to cut rates, maybe that's a disappointment for the market when they're expecting 2 cuts this year. These things are all unknown. So like I said, you trade the market that's right in front of you, and the market is still structurally very tight. Underneath the surface, a lot of stuff happened in dispersion trade, but if we can't break 6,800, there's still no breakout. If we do break 6,800, be prepared for a measured move and opportunities to hopefully buy some dips. Like That's it. I'm kind of exhausted. We've been two months into the year and we're essentially flat. And I know there's a lot of good trades, but you've had a killer gold trade. You're having a great oil trade. That's awesome. Like already some nice highlights for the year. I'm boring. I'm just selling premium.
Sure.
And it's like I'm just sitting on, I told you yesterday, it's like I've got 300K racked up of premium. As long as price stays above the April lows, like I've got a decent amount of profit to make this year with hopefully a lot of safety. But
you call it boring, Chris. You call it boring, but to your credit, that kind of just theta decay is working in your favor. You've got, time just passing. Your markets are staying quiet. Last thing before we throw over the stream to our next show host, we got to move on. U.S. oil, just take a look. You mentioned, I think the quote of the day is trade what you see. Look what we've got on oil. You've just got on the 5-minute chart. This is the sort of move that looks like geopolitical headlines are still in formation when you get this kind of slow, chattery, consistent upside move. That tells me that something's going on. The press, by the time something's out in the press, it's in the price. That's what they typically say with these sort of breaking news headline stuff. So we'll keep an eye on it. Oil still got a bid. Stock market opens up in 30 minutes. Chris, thanks for coming on, man. Appreciate you as always for sharing some insights on this crazy market we're working at.
All right. Have a good weekend.
See you, Chris.
See ya.
Okay, guys. Up next, we've got Tiger Barry's going to be taking over the stream here for a little bit and going through some trade setups that he's watching currently. Before I throw the stream over, if you want to check out our Telegram channel, it's completely free to join. Make sure to do so. The link is right below me here. If you would like to scan the QR code, or we'll also drop the link in the live stream chat. Join us in Telegram. We're posting daily updates. So if you're trying to keep up with what is moving markets and why, from a macroeconomics perspective, crowd sentiment, and even technical trade ideas being shared for free, we're doing it every day in our Telegram channel. So take a second, join us there. It's in the live stream chat, or you can scan the QR code below my camera. Up next, Tiger Barry. Stay tuned.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Well, what's going on, everybody? Happy Friday. It's a great day by default. Just because it's Friday, we've made it. We've made it. We've made it. So hopefully everybody is doing well this week. We just got a few more hours of trading before we hit the weekend. Relax, take a break, take our eyes off the charts, and reset, guys. It's important to do on the weekends. Very important to do on the weekends. Tomorrow for me, Saturday, that's usually just my veg day. Sit back, watch YouTube videos, and just don't even think about trading, guys. Sometimes I'll get on there and watch some trading documentaries or, just little strategies I could pick up here and there. 12 years in, there's always a nugget to pick up. Always. I mean, if you want to buy things without looking at the price, then work without looking at the clock, right? There's a balance to be made. So anyway, hopefully everybody's doing well. And as far as today goes, well, really as far as yesterday, guys, just always keep in mind this. If you have a bad day or two in trading, especially the early part of the week, remember, it just takes one day to kind of change things around. And so that was kind of me yesterday. I had a lot of stuff going on this weekend, so I didn't really follow a ton of attention on the charts because of some other things. Monday, I did have a small loss on gold. And then yesterday I had 2 wins. So it was those 2 wins I was telling you guys about yesterday. Starting off with the euro dollar and then the Swiss franc right after. I think I mentioned that one yesterday before the show ended. So, and just a recap of that, if we take a look, obviously we know both of these are on our Edge Finder. Okay, as far as giving us some good scores to buy or sell. This one for a short, euro dollar. Now there was a choice between euro dollar and pound dollar, guys. They really both looked pretty decent. I just happened to get in the euro dollar trade 2 nights ago because it just to me it just looked a little better. So just taking a look from the top down as always. 8 EMA, it's kind of hard to see, but the 8 EMA, the dark red line, is below the 21, which is the light red. Okay. So that is in line with the Edge Finder. Gives me a reason to short. So then we drop on down. I think I looked at this at one point from the 4-hour supply zone. Okay, talking about this one here. And then you see the white line. I kind of drilled in a little deeper just to find my confluence. And I was looking at this 1-hour candle here inside. So that's the basis for my trade. 1-hour time frame. I got the 50, which is the light blue, 50 EMA below the 200 EMA. So that's another check. We bounce into the zone. We collect unfilled orders on the way out, short here, and then let it ride, guys. Now, where's the take profit on this? I think I might have mentioned this yesterday. A lot of people will just simply take price down to this support type area down here where you see all these wicks, right? So for me, I like to look specifically at zones. So if I go down to a 10-minute, yes, 10-minute time frame, I actually had observed this 10-minute demand right here. Okay, just a very sharp drop, base for 10 minutes before it flew upwards. So that to me is an important point. VSA, volume spread analysis activity, picks up, meaning institutional activity. And so that's where I wanted to take my profit in this thing, guys. That exact spot. In fact, let's see here. Yeah. So I ended up having my buy to cover, okay, my take profit, basically on this green candle right here, just before it bounced in. Because I didn't want to take a chance of those unfilled orders push the price against me. That's exactly what happened. So I literally closed out at the exact perfect spot. Okay. Yes, it is a thin zone. Doesn't look that powerful. Okay. But when we have such a strong push out like that, break structure points, got to keep an eye on it. So I didn't want to, me personally, I didn't want to put my take profit down at the lower end. I wanted to put it there. So yeah, good spot to put it in because it closed me out for my profit before turning around and totally reverse it, right? So perfect example of why we don't always want to just look at the swing low itself or the support. We want to look specifically for zones. And that kept me with a good profit, okay? Because it turned around and reversed. So it's funny though, because I say all that to say one of my accounts I actually did mistakenly, because I've got like 4, 1, 2, 3, 4. I've got 5 accounts right now. And on one of the accounts, I didn't even do that. So on one of the accounts, I actually put my take profit at the lows, okay? The lows down here. Now, this was just a child. This was that I think I might have told you guys last week, this was that challenge account from Olaf Prime, because they're doing a competition this week, which ends today. So I got in there and I was in a hurry to get it in because I had 5 accounts I'm looking at, right? So I actually put it in down here. So I'm still in that trade on that one. But the other 4 accounts, my main accounts, guys, I got out at that demand zone. So that was euro dollar, and Swiss yen was the other one. Okay, over here was looking at this demand zone down here. Yeah, that's right. It was 10 minutes. 10-minute zone, guys. So starting to taking a look at this zone right here. This indecision candle. This doji with a bunch of wicks, right? So that was the unfilled orders I was looking for. Strong gap out. Okay. And then when price comes back around, get into our trade here. And if you guys remember, I told you I wanted to be aware of this overhead supply zone right here, because obviously my take profit was here. And as you can see, we've just blown through it. But I wanted to be aware of this zone right here. Okay. So if you pull that forward, what happened? Okay, we got the bounce into the supply zone. We got a rejection, which I expected, before the trend, before the strength of the Swiss franc over the yen ended up continuing or taken back over. Okay, so it didn't go against me, but just to show you, even on a trending asset, even on something that's strongly in our favor from the edge finder, you still got to be aware of these little zones that are just hiding in plain sight. Now, in this case, obviously, yeah, it just bounced in, did get a reaction, but then again, it eventually, the momentum upwards continued. So yeah, took that profit up here, okay, as well. So that's 2 for 2, guys. I mean, that turned my week around right there in one day. Okay, one day. So, and then as far as today goes, I did have another alert that just hit shortly before the show. Would have been on Aussie Swiss over here. So we've dropped into this demand. Now I start from a daily. Obviously, we're trending up. It's a lot. This is one of those very wicky assets, guys. You get a lot of wicks on this thing, a lot of wicks. Okay. So it's a little bit more difficult talking about Aussie Swiss. It's a little tougher to find, pure zones pure zones too, without having a bunch of wicks. Okay. It's messier. But despite that, if I drop into a 4-hour, okay, I'm kind of keeping an eye on this 4-hour candle here, and then drilling down a little deeper into my 1 hour. We have since blown below the 200. So we've pierced the 200 on this thing. 50 remains above 200, showing that the trend I want to see on that time frame is looking good. And so now we've dropped in. So, at this point here, just looking for a 1-hour candle close. Okay. If we can get a candle close going green, if I can have some heavy wicks underneath, like we have on that leg in candle right there, okay, we can get a close, whether it's this hour candle or the next hour candle, preferably this hour candle, then the 7 a.m. Central Standard Time candle that creates itself for me, as long as it goes above the hourly close, well, then we'll take a shot. We'll take a shot to the top up here. Okay? So obviously I got to sit on my hands for the next 45 minutes on that to see what it does. Can you look at CAD Swiss? Yeah, absolutely. Difflin, let's take a look at it. CAD Swiss. Caddy Swissy. CAD Swiss. Okay, we got a neutral score on the edge finder. CAD Swiss is giving us a neutral -2. And if you guys haven't noticed yet, those of you that have the edge finder, Nick has outdone himself yet again, in putting in our currency standalone index, our currencies on here. Okay. He told us about this yesterday. So as a reminder, guys, if you have the edge finder, or if you are planning to get the edge finder in the future, just know that when you pay for it once, all the work that Nick puts into it, as far as updating it, upgrading it, making it better, because it seems like it's getting better every single day. Those are all free upgrades, free updates. It's nothing you have to pay extra for. Okay. So you pay once, regardless of what you pay. And that's the last time you have to pay anything. And like he said, he spent around $1 million in developing this thing. Okay. which makes sense. Man hours, tech skills, all that. So that's a steal of a deal, no matter what you're going to pay for it. So if you haven't gotten your Edge Finder yet, guys, definitely get you one. Okay. And while I'm on the note of plugging, Ola Prime, that is a company I worked with. Okay. Worked with them for about 10 months. I think it was 10 months. But he's also got a code for you for that. If you're looking for a new prop firm, A1T35. There's also a QR code right there on your screen. You can go to olaprime.com and check out their challenge accounts. See if that might work for you. They've got instant funded as well as 1-step, 2-step, 3-step accounts. Guys, they have a 3-step Prime account. It's one of the very few companies that do it. Okay, so it just simply means 1-step is your highest price, 2-step is a little cheaper, 3-step's even cheaper than that. So definitely encourage you to go check that out if you're wondering what the heck a 3-step account is. Okay, so go check that out. Again, olaprime.com. But anyway, just getting back into it, we did have the PPI that came out pretty hot this morning for the U.S. dollar, as we could see over here. And then I'll get back to your Swiss yen in just a second. I wanted to point this out though. So that's a hot reading, guys. Now on the last reading we had over here, just looking at the dollar heat map by itself. Okay. It was a bullish reading as well. So this should remain the same. Okay. You had a bullish reading last time. You have a bullish reading today. It's going to remain the same, right? So we're still sitting at about 53% exceeding expectations for the US dollar on the high impact red folder events. So there's your US buck. But you did ask about Swiss yen, so I'm going to hop on that for you real quick. Is that right? Swiss yen? Yeah, or CAD Swiss. I'm sorry. CAD Swiss and then Kiwi Swiss, I see. So let's take a look at both of those. So CAD Swiss, where are we at? CAD Swiss right here. All right. And I like to do this, guys. If I want to make sure I'm in line with my trend, I'll oftentimes, just for the sake of not having to switch from time frame to time frame, I'll just switch this to a 2-chart format, just so it's a quicker glance for me. So, for me, looking at your CAD Swiss, obviously we are in a downtrend and we're kind of clustery right here. We're at this little swing low down here. So can we break that swing low on a higher time frame? And by the way, guys, just so it doesn't confuse you, on the right side screen here, I've got a daily chart that you'll see the candles are colored a little funky. It's basically an indicator that's in here that even if you have a downtrend, okay, if you have a downtrend, you'll obviously have green candles in there. It'll still paint them red. It's just basically showing the overall trend. So sorry if that confuses anybody. This is just in my head how it helps me to see things. But anyway, 8 is below the 21, so we definitely would only want to be shorting anything in this area. We do have a demand zone underneath, as you can see, that might cause us a little bit of a bounce. So it looks like that's going to be even lower than a 4-hour. What did I paint that on? Is that a 1 hour? 1 hour. Yeah, I think this was a 1-hour demand. So this is something we'll want to be careful for if we do happen to get in any shorts. Okay, look at this. So this candle here, this demand zone was formed on a red VSA candle. See that? So that's what you call ultra high volume compared to the more recent candles. And you got 2 of them actually right there. So that's a danger zone if you're shorting. You just want to be aware of that. Okay? So the first question I try to always ask myself if I'm going to get into a trade at every single time, the first question I have it's not necessarily how much money can I make, it's do I have any landmines in my way? Okay, that's a landmine right there. And we can see where price is right now. Okay, it's not even that far away, 20. So we're at 28. So we're basically only 20 pips away from that landmine. Okay, so our trend is telling us to short. CAD Swiss is giving us a neutral score, but we're only 20 pips away. So just something to be aware of. Okay, just something to be aware of if you're looking to short. And as far as an entry on this thing, actually, let me do this. Let me go back over here for a minute. I mean, you've got a 4-hour supply zone candle here, but the challenge is you got a lot of candles to the left of it. So yes, that is a supply because we have a strong gap out of it, but you got a lot of candles. That's choppy. That's way too choppy for me. Remember, I like supply zones or demand zones that create themselves, not as a result of a bounce from a previous supply or demand zone. but also that have basically 3 candles or less, 3 basing candles or less. So to me, I'm seeing 1 candle, 2 candle, 3 candle, for just a lot of wiki ugliness, guys. So on a 4-hour time frame, it just doesn't look that pretty. It really doesn't. But anyway, it is still by definition a zone. So if we go down to the 1 hour on this thing, the 50 remains under the 200. So that's good, but just barely. And that's another thing, guys. You know, that when we see our moving averages that close together, that's just another way of saying, if you look to the left, it's choppy. Okay? Up, down, up, down, up, down, up, down, up, down, up, down. I like to see the moving averages spread apart a little more. So that's another thing I see that's a little bit of a red flag on this, as far as if I wanted to utilize that zone. Yeah, I mean, but you know, of note though, the 200 is running through both the 1 hour and the 15-minute time frame. Okay, it's running it's running through that zone, I should say. So if I really wanted to get into this trade, I'd probably just tiptoe in, just a small percentage. Okay, small percentage. But I think there's a lot more better things to trade out there, because again, when we go to the daily time frame, what is it? It's just a sideways chop fest, right? Sideways chop fest. So hope that helps. Just be careful with it, like I said, because of the demand zone underneath. And then I think I saw, was it Kiwi Swiss up here? Yeah, Kiwi Swiss. Take a look, guys. But yeah, just real quick before I forget, that is my number 1 asset, like I said, that I'm keeping my eye on today, just so you guys know, that the Aussie Swiss. Okay, before I get too deep into looking at other charts. But anyway, sorry, back to Kiwi Swiss. Kiwi Swiss, Kiwi Swiss. Kiwi Swiss, come here. There we go. All right. So daily, we got the 8 below the 21. This is another one, guys. See how choppy this is? Some of these New Zealand pairs, some of these Swiss pairs, they have a tendency of doing that. Just getting really wiki, really wiki. So there's probably better assets to trade, but it looks like I drew this zone up here, guys. So here's our 4-hour supply zone. On a 4-hour time frame, our 50 is below our 200. But again, the moving averages are just too close, meaning we're choppy. I like to see the moving averages spread apart. So that's 4-hour, but let's look at the 1 hour for you. Yeah, same thing. See how close together? I want them separate. I don't want them hugging each other's neck. Okay. I want them separate. I want them separated. And then, yeah, by the time price comes up here on a 1 hour time frame, the 50 is going to cross the 200 anyway. So it's really a no-go for me. It's got to be clear and distinct. Right. I had put this supply zone in when price was down here. See how this is spread apart down here? These moving averages. See, that's when I drew up this supply zone. So now that we've went all this choppy sideways nonsense, it just doesn't look as pretty. But again, if I had to put money on it, I've got an alert set at 46.5, basically 46.5, with the anticipation of buying the 1 hour that's nested inside. Nested zones, guys. Nested zones are powerful. Okay. So anyway, that's Kiwi Yen for you. What else we got over here, ladies and gents? Nasdaq, please. Ching says Nasdaq. Guys, when it comes to the U.S. indices, all 3 of them had bounced into a recent supply zone. Look at here. So this was the S&P. I might have mentioned this on Monday or Tuesday. Okay, we bounced in, and you see what I drew up. Look at that. I drew this up on that day. We bounce in. We collect unfilled orders from the zone, which, by the way, had a strong fair value gap coming out of it. And now we got that reaction. The whole goal, if we were going to get in this short, would have been short there, buy to cover down here, because we got a new demand zone right in this area. So just a short, simple little trade opportunity. That was S&P. You asked about the Nasdaq. This one went a little deeper. Okay. Obviously, if you incorporate a stop loss, though, depending on how tight of a stop loss you put in. See, if I were to have gotten into this trade, now I was fighting other things, so did not get into any of these U.S. index trades. But if I were to short there, I'd be wanting to take price down to here as well. So let's see what we got here. Okay, that's about 306 points. What's 306 divided by 2? That's 150. So let's see. Would we have gotten clicked out? Yeah, looks like we might have gotten clicked out of this one. Okay, full transparency. Well, no, I would have actually put a little higher. I don't know. We might have still been in that trade. I mean, that's half of the distance from there to here. Okay. I mean, if I really wanted to refine this for you, I don't know, what's a 15-minute look like? Yeah, I realistically would have wanted to be aware of this area here, this zone, this indecision candle. That would have been a good place for a potential take profit just because of how strong it looks. And look at the VSA candles. The institution stepped in here, guys. It's a lot of activity. So that realistically would have had to have been how I measured the profit target, the take profit. So now let's measure with that in mind. Right. What do we got? Let's go back to a 1 hour. Okay, short here, buy to cover there. That's 370 pips. 370 divided by 2 is what, 190 something? Yeah, that might have still clipped us out because it's basically right there. That candle right there would have probably wicked us out. So that would have probably been a loss, full transparency, if you chose the Nasdaq. Now the S&P would have been a profitable one, and the Dow, we hit this zone up here as well. See, that would have been a profitable trade. But just I didn't really like the signals. We were getting neutral on, I think, 2 or 3 of these. I think we had a bearish signal at one point on S&P, was it? Or one of these 3. But I was off playing around in other markets, so I didn't even get into this trade. But anyway, as far as Nasdaq, just to go back to the start here, turn on everything else. I do believe we are still getting a neutral score, right? Nasdaq, where you at? You're hiding, Nasdaq. Where you at? Where you at, boy? Yeah, +2. So it's neutral +2 if anything. Obviously, there is a demand zone a little small, a little further down. But we got our 8 below our 21. So yeah, it's just all together. It's just not really, it's not really giving us a strong reason to buy or sell this thing. If anything, it's very tinily, it's very small, it's very slightly bullish, but it's neutral. Our 8's below our 21, so that's a download. Yeah, it's just a mess. It's just a mess. Pound Aussie and Aussie Yen says unknown. Yeah, we can take a look at that. Pound Aussie, let's do that. Do that for you. Oh, Pound Aussie. Okay, let's get up here and get rid of the neutrals out of this list. Okay, Pound Aussie, no bueno. From a technical setup, we've got a downtrend going. And by the way, as far as Pound Aussie goes, keep in mind, we're still trying to chew through the rest of this demand zone, this higher time frame demand zone from way back. Remember, these things don't always expire. You got to be aware of them. Okay? Some people may say if it's past 20, 30, 50 bars, it's probably worthless, but nonsense, guys. You want to keep old stuff in mind. This is from July of 2024 area. Talking about this, I think this was a weekly zone. Oh, there's Cartman again, peeking his ugly head. Okay, we're talking about this weekly demand. Yeah, you want to be aware of that kind of stuff. So we want to be shorting something that's in a higher time frame. Consolidation? Probably not. I know I wouldn't want to be doing it. Just in case the past comes back to haunt us, right? Talking about old zones. But anyway, just looking at it, you guys see I did actually draw up a supply up here on a 15-minute. So that's the origin of a strong move down from the 15-minute time frame. 50 is below the 200. So if we're talking possible trade opportunities, possibly that one, yeah. I could possibly see that at the 190.81 area as a spot to short. Now that's just technicals because remember we don't have the fundamental sentiment confirmation from the edge finder. So do as you will, but if you're looking for a little bit of a premium just from a technical only spot, not financial advice, but if it were me putting my money on it, I'd probably be doing it in that area. Because also on a 1 hour time frame, what's it going to do? It's likely going to pierce the 200 EMA, which is kind of water falling down, right? So it'd be something like this, something like that, right? That's where I personally would put my money, but I ain't touching it because my boss is telling me to stay the hell away from it, right? Excuse me. And then you had another one. Oh, wow. And it's already 8:39 or 8:29, guys. Yeah, we'll pick back up on this Monday, guys. Yeah, like I said, 2 for 2 for me. Well, 2 for 3 if you include the loss on Monday from gold. 2 out of 3, I should say. I'm just going to personally be paying attention to stuff on small time frames today. What I don't want to do personally is get into a 4-hour supplier demand zone trade and hold it over the weekend. Not with all this geopolitical nonsense going on, guys. Iran, we still have, kind of halfway forgotten about Greenland for a while, but there's just too much hot stuff going on geopolitically for me personally to want to be getting into a higher time frame, buy or sell, and try holding it over the weekend. So absolutely the hell not. It's 15 minutes. Time frames are bust for me today, guys. And with that, I do think we got Mr. James coming up right after me. So with that, hope you guys have a wonderful day. Stay safe. I'll see you next week.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello. How are you guys doing? Happy Friday, end of the week. Hope everyone's had a good one. So many of my positions have been closed throughout this week, so pound Canadian was stopped out. Unfortunately, we've had a couple of different positions, so did very well on oil actually this week. So had a few different positions, had a long entry here. I decided to scale into that same idea right here. Both positions were stopped out on this pullback during here. So this one was a very small loss and this one was quite a nice winner. I re-entered yesterday. So we all looked at this trade. Oh, I showed it on stream yesterday. So I was looking at this level right here, this 50% or this value zone on the fib, which is obviously between the 50% and the 61.8%. So I entered that long position. I closed it right here, which was really nice. Unfortunately, in hindsight, could have held it much longer. However, what can I can't really complain. Had 2 very, very nice trades on oil this week. Open positions, we have silver. So I added in silver yesterday on the retest of this level. So obviously we've had the break, we've had the retest and continuation. So I entered on this H4 candle close right here. And the reason I entered on this retest and not this one is because at this point, we had all of these moving averages cross over, indicating that this bearish trend we were in has now come to an end objectively, and the bullish trend is now starting to emerge. So I'm looking for one more position on silver, which would basically be exactly the same idea as what I've got down here. So I'm looking for the break, retest. I'd look for another entry here and then let it run. And that would be me fully allocated to silver, no more positions. And that would be that. Because I'm also in gold. So I entered gold pretty much for the same reason. So we had the break, retest right here into the fib value zone between the 61.8 and the 50% level, also lined up with the previous resistance, of course, forming that retest. So we entered there, and now again we're just letting this one run with reduced the stops by 50% or 0.5%. So risk is reduced on gold. Pound dollar still sat in this one. This was a really close trade. This was by the skin of my teeth. It was a very very, very close call. So yeah, it came up really, really close to stop loss and then had a complete reversal and now in a very small amount of profit. So I decided to scale in and just round up my risk a little bit to a flat, almost $200, just because the initial position wasn't my full allocation for the whole idea. So I decided to add in a little bit more once we started coming back into profit. I'm looking for a correction of the left side move that we have right here. So my target is 1.322 on that one. And the last position is the pound NOK. Now, this one as well started out quite rough. So we entered on one of these two bullish candles here. I'm not exactly sure which one it was. And then, yeah, it was just a rally towards stop loss. I mean, it wasn't as close as pound dollar, but it was moving pretty aggressively. And again, just a really nice reversal. So now I'm just watching this support level. Can we break it? If so, I will trail stops towards the high, and I'll look for a scale in at this point on the retest. But that's it. That's all I'm in for now. So, yeah, there we go. Bashi, hello. Sluggy, hello. Hope you are all well. Othermain, good to see you. That gold breakout at close to 2% profit. Fantastic stuff. Ray Beast, well done. What about euro dollar? Yeah, I closed euro dollar yesterday. Pretty much break even. Didn't really get anything out of euro dollar, but it was a 0.02 lot. It was a really, really small position, so I didn't really care about it enough to warrant holding. However, euro dollar is getting a bearish reading down here on the edge finder with a -9. It's actually it's the strongest score on the edge finder from bullish to bearish. Obviously, we don't have a +9. So euro dollar, I am leaning bearish, of course, but price action wise, I just can't really justify being a short seller at this time. The daily is still very bullish, technically, looking at the moving averages. We've still got these, higher lows getting printed. So the daily time frame already has sort of nullified the idea. Then we go down to the H4, and there is just nothing going on whatsoever. This is just a sideways range. We've got no direction with the moving averages. It's just flat. So there's not any pullbacks. There's no trend. There is nothing there on the H4 for me to trade from. Even if there was a bearish setup here, again, looking at this daily time frame, I just can't really justify the entry because we've got this. I mean, obviously, whatever you want to call it, it's like a false breakout, whatever, doesn't matter. Sort of level here that we're seeing price respecting. I'm fairly sure it's a 50% retracement as well, or a fib retracement here. Yeah, so we're down at the 61.8. So actually, from a technical standpoint, the daily is actually telling me to buy. So yeah, euro dollar to me, there's just nothing to do here. I would need to see the trend establish bearish on the H4. Then maybe I could warrant a short position, but for now it's too risky. GP in the toilet, I know. Been calling it since last year. You're welcome. JSB changing his angle every week. Looking us dead in the eyes. Yeah, well, I got to keep you guys on your toes. The DXY seems to not be able to break above resistance. Yeah, it's struggling. So we discussed the dollar yesterday, and I still stand slightly bullish. Now, when I say bullish, by no means am I going heavy shorts. I'm not doing anything really involving the dollar other than obviously metals and pound dollar, but I'm definitely not sitting in a massive dollar long position. So I would expect us to break above this resistance, start coming to correct some of this left side. As we've spoken about many, many times, these aggressive, impulsive moves that we see on this left side do generally get corrected. I mean, you can see the same thing here, correction, same thing here. We see a correction. So it can take, hours, days, weeks. It can take as long as it needs. But eventually, I wouldn't be surprised if that does happen. After that, I don't know. On the other hand, sorry, not on the other hand, but following on from that, the dollar is getting a bullish reading. And the Fed, I don't think has any room to cut at the moment. So I just don't really see a dollar bearish case at this time. That can change, of course, but right now, I just don't see a reason really to be short dollar. So yeah, that's kind of my thought process. But either way, I've got no real bias, sort of medium term anyway. James Pound short call and narrative age like fine wine. Thank you very much. Yeah, I mean, this is the thing. I've spoken about this before, but no one, or as far as I'm aware, no one really seems to pay attention. But when you live in a country, it's so much easier to be able to forecast what is likely to happen to the currency. Because when I can do forecasts on the dollar or the euro or whatever it may be, fine. But the UK specifically, I live here. I see the cost of living. I see public services collapsing. I see it, experience it, I feel it. it's my everyday life. So it becomes much more straightforward and simple to be able to put all these pieces together. And that's why I was so bearish on the pound over the past sort of 6 months, roughly. But yeah, I mean, it's paid off quite well, so I can't complain. Other than this pound Canadian position, this was a bit of a joke, but it was my fault. I had my stops way too tight on that one. Anyway, moving forwards, there's nothing on my watch list. I'm completely flat, pretty much done for the, well, yeah, I mean, I'm done for the month. It's the end of the month now anyway. So yeah, I mean, oil, I do still really like it. So we've got the bullish reading on the Edge Finder. We've still got tensions with the US and Iran. I wouldn't mind going back in for a long position, but of course, I just need to see that pullback. Now, the thing is, I'm not sure it would really hold because, and this is more just from a fully discretional idea or discretional standpoint. If we ended up pulling back from here back into this fib level, that would be a bit of a problem for me because it would show a double top here. Now, again, more of just a loose discretional idea. It just tells me that buyers weren't overly interested in continuing higher. So I'd probably avoid that entry. So I'd need to really see oil push even higher. And then I could move the fib to something like this, and then I could enter there. Does that make sense? So I just need to see the trend continue, and then I can wait for the pullback. If we pull back from here, likely I'll avoid it. What's your macro long-term view on the dollar? I think the dollar is going to be fine. I've said this before, but it's one of those, it's just kind of the way that humans work and the way the markets work. When, how much dollar doom and gloom have you seen recently? How much doom and gloom do you think there was at this point before this rally, or at this point before we corrected, or at this point down here? How many times on these drops do you think people have said, "Oh, the dollar's doomed, de-dollarization, the U.S. economy's collapsing, blah blah blah," and then we completely turn around and start a bullish cycle? I'm not saying that's going to be the same. Of course, no one will be able to tell you that 100%. But it just makes me cautious that, we've got this weekly support. We've got this multi-year trend line. To be honest, the fundamentals to me aren't very concerning at all. We've still got a lot of left side here that I do think we could see a correction of. So yeah, if I had to say long-term, I would be bullish. But again, it's not anything I'm trading from. It's not anything that I'm overly bothered about, to be honest. The DXY is so boring. It is. Yeah, it is a bit of a snooze fest. Citibank calling 1.24 in GU by the end of the year. Are they? Interesting. Let's see. 1.24. That is a large target. So we're expecting all the way down here. All right, let's mark that up and have a look. 1.24. Let's go weekly. I mean, to be honest, it's obviously possible. Anything theoretically is possible. But in my opinion, for 1.24 to get hit, we'd need to see a pivot in the Fed, because we've already got the dovish Bank of England, fine. But I think we can't really see long-term sustained dollar strength unless we get a hawkish Fed. I mean, although I am bullish on the dollar, again, loosely and lightly, I'm not convinced that we can just suddenly have a massive turnaround and a complete reversal. So, but again, I'll be honest, I don't care. And when I say I don't care, it's obviously I don't trade multi-month timeframes, really, unless it's gold and silver, or silver specifically. People are scared. People are afraid to catch falling knives since they don't know what's going on with the macros. Yes, that is also a great point. Near-term elections, we have fears of recession. Yep. Ending the month with 4% return and Sharpe ratio near on 80K. All right, the 4% return, fantastic. However, if your Sharpe ratio is at 80,000, I mean, I don't even think that's possible. No one can have a Sharpe ratio of 80,000. I mean, I'm going to assume that was a typo. But yeah, 4%, fantastic. Good work. Oh, sharp ratio is near 1. Okay, there we go. I was gonna say 80K, absolutely nuts. If so, send me your bank details. I'll send you some money to be a private investor. Yeah, sharp ratio near 1. Fantastic. Good work. So sharp ratios are it's basically a way to measure volatility of a portfolio, simplified. So the higher the sharp ratio, the better. For reference, quant funds, the sort of institutional level trading, they will completely disregard anything with a sharp ratio under 1, essentially. So quants specifically will normally target a sharp of 2 plus. Anything above 1 though is good, but for retail, it's really not that much of a problem. It's more for sharp ratio is more used for investors just to get an idea of your trading, really. But if it's your own funds and you trade in, really not that much of an issue. So let's move on. So silver and gold have had a pretty good start to the day. However, we are seeing a bit of a correction here. I'm not really concerned because we have broken above this level. So this could just be a shorter term sort of retest. Doesn't matter to me, to be honest. I'm quite happy to sit through silver for as long as it may take. Target wise, I'm going to be honest, I don't really have a target. I was thinking about it this morning. Now, I think first target, so if you are in any swing positions on silver, I would say towards 100 to 105 could be pretty good for a sort of, again, a shorter term target. 120, so basically a complete correction back up to the previous all-time high. Again, I think that's a pretty good idea. Beyond that is what I'm targeting though. So I'm looking for around 150 to 200. Now that's of course not a short-term idea. That's not a 6-month idea or a 3-month idea. I'm happy to hold. It might take a year, it might take a few months. I don't know. I don't care. Happy to sit through it and just enjoy the ride. However, with gold, I'm not in the same position. I'm quite happy to cut gold at 1%, 2%, 3%, wherever it starts to show a bit of slowdown because I've got exposure to silver. So this is modeled for a swing trade. Obviously, I've layered into silver over time for a long-term accumulation. So different trading styles for different reasons with different time horizons. We've already spoken about pound dollar, pound NOK, really not that interesting, to be honest with you. Looking again, as we spoke about on pound dollar, a bit of a correction down to the off this left side, looking for around 12.5. But yeah, that's really it. So my portfolio at the moment is very boring. There's nothing that's keeping me on my toes. Oh, you mean on an 80K sharp ratio of 1%? Fantastic. Okay, yeah, really nice. Well done. Right, let's see what we've got. I'm sure you've already been told, but the A1 guys, I'm not sure if it was just Nick or whoever, but whoever it was, credit to them because they've added just currencies, which is amazing. I love that. As obviously a currency trader, this is really, really good to see. So I don't really see anything on here that's actually piquing my interest at all. So US dollar, again, as we've already spoken about, I do lean slightly bullish. So I'd be happy to continue to buy the US dollar if setups arrive, and it wouldn't be high risk. It'd just be normal standard risk. No layering, nothing aggressive. Australian dollar seems to have fallen off a little bit. We've spoken about this before, but I think the Australian dollar ride isn't over, but I think it's kind of been missed now if you've not already caught it. So if we look at, I don't know, let's take Euro Australian because I was in that one yesterday. Where is it? Here, Euro Australian. The rides are pretty much over. And again, I don't mean in terms of like they're actually done, but I just mean there is no reasonable entry, in my opinion, for the way that I trade. So the daily timeframes are very stretched. We've almost corrected the left side here. There is a little bit more room to run down, but the risk now of mean reversions, in my opinion, is only increasing day by day. It just gets higher and higher. I don't want to sit through that. GPAUD, exactly the same situation. So yeah, here again, very, very extended on this daily time frame. I've actually fully corrected this left side as well. And actually we're now at a really strong daily level of support here. So the central bank divergence idea is still there. But again, I think the ride has been missed if you've not already caught it, unfortunately. This sucks churning this Churning morning? I've got no idea what you mean, ball out. You're talking about the market open? I've not checked, actually. Let's have a look at the open. Oops. Oh yeah, really flat actually. Bearish. Oops, bearish pre-market, but yeah, nothing. Nothing at all from this open. Interesting. I suppose, to be honest, yeah, really aggressive downside, really, actually this week. But yeah, I mean, I'm still bearish on the S&P. Well, I probably shouldn't say that. I'm still cautious on the S&P, but yeah, I don't know. I was short. I got out of break even on this bearish candle here, so I didn't actually get anything from it. Didn't lose anything. It was fine. I would be quite happy to go short though if we can start printing some lower lows and lower highs. We can get these moving averages to establish bearish. Fine, cool. But yeah, for now, I mean, the same applies to what I've been saying. We're just sideways. There's no trend. The moving averages are flat or parallel. Nothing to do here whatsoever. So it's a case of just waiting, really. Before taking trade, you run COSI probability in EV. Yep. I think that's, yeah, I mean, if you're doing backtests with code, so you're running, simulations for finding your EV probability, Sharpe ratios, things like that, it's fantastic for fully mechanical strategies. But when you trade macro, so like fundamentals, policy, things like that, it gets a little bit more difficult to build a full backtest because, you could have a technical setup that's really valid. But if you rely on things like central bank policy, inflation, geopolitics, all those types of things, it becomes obviously more discretional and off the charts. So it becomes, the back tests from code become a little bit unreliable. Caught a few good ones, but nothing special. Fair enough, ball out. As long as you made some money, well done. Missed 18 R&R. Got swerved twice as well. Bashi. Bad way to end the week. Unfortunate. I've just seen the momentum model guide has been dropped in the chat. If you are interested in learning how to use the Edge Finder to discover trades, so we go through trade discovery, trade execution, risk management, and a little bit of portfolio management, nothing overly complicated, nothing in depth. It's more, or I developed it more for traders that are wanting to learn, not necessarily experienced traders that already know what they're doing. So if you are someone that's sat in the background lurking and you want a free, again, 100% free, no strings attached, fill out the jot form and you'll be emailed a full video and a full PDF. It'll give you my technical strategy and the Edge Finder walkthrough on how to find and validate trades. Macros are ever changing, never static. Exactly. So I tried to backtest my strategy with macros. It's so obviously backtesting is time consuming anyway. Backtesting with macro in mind, it's ridiculous because depending on how far you go, sure, you could use the Edge Finder to check what the situation was, but even that is a long process. Again, if you're doing your backtests, or you could use something like Fred, but it's just so time consuming to do that. And to be honest, if you understand how to use macro and you've got a repeatable technical strategy, there is no real complexity going on. Of course, that's not me saying you shouldn't backtest. You absolutely should. But I do think, again, if you're more of a macro trader, it does become much more difficult to backtest and get those results that will truly reflect what you can expect. So I'm just looking at oil here on the H1. I've only got a few minutes left. That's gone quick. If you are a intraday trader or you're a scalper, there might be an entry opportunity here. Now, again, I'm not going to be looking for this, not my interest right now. But I'm just noticing we do on the H4, we've got this resistance level. And then if we go to the H1, we've obviously broken. This could be a little retest for a little bit of a bounce. Whether it continues from there, I don't know. I don't really mind. But again, if you are sort of intraday, we could be looking for a bounce off this level, maybe just a quick scalp to the previous high and beyond, maybe. Anyway, let me just see who's on after. There might not be anyone on after me, actually. Let me just check. There is. Marco is coming on in about 5 minutes. So we'll do a little bit more and then I'll throw over to him. I appreciate that, Bashi. Can you open the copper scorecard in the Edge Finder? Of course I can. Hold on. Let me just find metals here. Thoughts on pound yen? It's a good question. I don't really have any thoughts, to be honest. I think with the Bank of England sitting quite dovish, the Bank of Japan is expected to hike. I don't really have anything for pound yen, to be honest with you. I don't want to be a buyer of pounds. I don't want to hold down a portfolio, but I also don't like trading the yen. The yen is the only asset that I have had real trouble with almost every time I've traded it. So I remember, was it last year? It might have even been the year before. It was a while ago when dollar yen had its quote unquote crash. It was maybe July. Was it last year? I don't know. Anyway, I got caught in that pretty badly. Lost quite a lot of money on that one, to be perfectly honest. There's just been multiple times I've tried to trade yen and it's just never worked out. I find it particularly difficult. I don't know why. Again, dollar, euro, pound, no problems. But yeah, yen just never wants to play ball with me. So copper, bullish reading. I've had the scorecard up, so I'm going to move along. Yeah, so we were looking at copper. Was it yesterday? I think we've looked at copper throughout the week. So what I was saying on copper is there is not really anything for me to do. I mean, I can't trade it on here anyway, but we're sideways. There's been absolutely nothing since the start of the year on copper in terms of a trend. So if we were to be buyers, or we wanted to be buyers, I think the most reasonable entry would be waiting for the break, the retest, and a continuation. On the other hand, we could actually look to buy support. I think that would also be quite valid. But whilst we're inside this trend, whilst we're inside this range, I just don't see any trading opportunities at all. Also, permutation is wild on macro side. Only way to learn it. Yeah, that is true, Sluggy. I've found that actually since I've had my mentorship and teaching the economics. It's like, I do my best to explain all the different nuances and contexts and situations, but that's kind of the thing when it comes to economics. Like, you could read all the books, you can do everything, but they are situation dependent, really. Not every time, you can understand the if then X or the cause and effect and things, but yeah, the sort of situational nuances can be quite difficult to understand sometimes. Thoughts on CAD? I mean, CAD is going to get support from oil anyway. So to be honest with you, I wouldn't want to go short on the CAD until we have some sort of resolution with Iran and the US. So the Canadian dollar, or the Canadian economy, in my opinion, is not doing very well. Actually, let's see what we can actually check that now, or we can check it much quicker. So let's just see what the Canadian dollar is getting here. Yeah, so -4. So it's not bearish yet, but it is neutral, edging on the side of bearish. So I wouldn't want to be a seller because it's getting support from oil, but I also wouldn't want to be a buyer because the fundamentals are bearish. So as I said, the plan I would have is either go short on the Canadian dollar if we get an escalation go long Canadian dollar if we get an escalation with the US and Iran. If we get a resolution, then short Canadian dollar makes sense. So it's more a case of just waiting and seeing what happens here. Do you look at fundamentals? Just technicals enough? How can we read fundamentals? Shabby, get my free guide. There's a link in the chat somewhere. They might put it back in. So I go through basically what I'm showing you here. It'll give you a high level overview on sort of there you go. That momentum model guide, it goes over the technical strategy and the fundamental side of the Edge Finder. But to answer your question, no, I don't think technicals are enough. I think they're a great starting point. You can make money with them, but I think adding the fundamentals and the economics and everything else on the top just not only boosts your win rate, but it also gets rid of a lot of problems like greed and fear and all of these things. It's like, as long as the fundamentals remain on your side, there is no reason really you shouldn't be in the trade, unless obviously you've oversized or you've messed up the technicals, whatever it may be. But it just gives you that extra layer of, this trade is good because I know this is the fact that the economics are data points. They are not wrong. The only thing that can go wrong is your understanding of them. So it's not like technicals where you've got a trend line or you've got whatever it may be that can be fully discretional and subjective, and it can vary per entry or per trade. Fundamentals don't do that. Of course, the data changes, but what that data means doesn't, if you understand it, you understand it. Do you get what I'm saying? Anyway, I'm going to head off. What do I think of order flow trading? I don't know. Never done it. I can't give a valid opinion on that one, unfortunately. Guys, I'm going to go because Marco is coming to take over the show. Guys, have a fantastic weekend. Thank you for being here. Enjoy the rest of your day. Stay safe and don't get margin called.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone. Welcome to my segment. Hope you didn't fly off. This is, by the way, the last segment for today, I believe. So I'm wrapping up Friday. Let's get started. Let me check out if I have any more codes left for the DNA giveaway. Yes, I have 2 more codes. Okay. One code is going to happen today. The next one will happen next week on Monday. So to get things started, I will go to my form, copy the form, and paste it in the comment section. What you need to do is you need to go to the form, you need to fill it out, and then you will get entered into the DNA funded giveaway. It is a 10K one phase account. So 10K one phase, that is pretty good, I would say. And yeah, check it out. Sign up with the link. Now let's get into the markets. Okay, let me just set something up in the background. Let's do, okay, great, awesome. So we got the DNA funded background. As far as the markets go, I have a trade on the Nikkei. This one is doing pretty well. I'm up around 3.5%, something like that. It keeps on trickling higher. I've trailed my stop loss to 56944. This was a signal in the A1 Discord, if anyone is wondering. Happy with the position. The fundamentals are still there. I want to be in this position as long as I can. Even if I get taken out, I'll most likely look to re-enter because, in my opinion, there has been a massive shift in the narrative and the money has started to flow, the capital has started to flow into Japan. Both the Nikkei and possibly maybe even the yen. So let's check out the situation on the yen. Okay, today not so much. I know I had a position on the euro yen. Let's take a look. Okay, that one, I got taken out on that one. But the Nikkei position seems to be holding on. If I go to the Edge Finder and I search up the Nikkei, it's a neutral reading at the moment. So if I do get taken out, I would not look to re-enter right now, but I would wait for a bullish reading on the Edge Finder. So I don't think we're going to get a massive red candle today on a Friday. We could. It's always a possibility, but I don't think it's going to happen. We would need to get a pretty big catalyst for that to happen. And then once we open on Monday, we're going to see if we gap up, gap down, or just stay flat, stay neutral. In the background, things are brewing. So in the background, the story is, I would say, the news that I'm watching and the reading that I've been doing, the story is still pretty bullish. So I think for 2026, buying the Nikkei is one of the great plays to have. I did have a gold position on my prop firm accounts. I closed it right before the stream, so I closed it for around 1% win. Quick gain on the prop accounts, quick gain on the Darwinex account. Now I'm actually eligible to possibly get an allocation from Darwinex, which should be interesting to see. Why did I close it? Why didn't I hold it through the weekend? Especially because we may get some US and Iran drama. If you have been following the US and Iran story, you would notice that China has sort of, I think they put out a recommendation for Chinese citizens to not go near Iran. And Israel has, I think, emptied their embassy or something like that. So essentially, Israel is moving people out of Iran as well. I guess things are heating up a little bit. If you're following financial juice, it's all very 50-50. You can find it in the market moving. Oman, we're finished with the day of US-Iran talks. Talks made significant progress. So that was coming from Iran, I believe. But then you had the US folks who said that the progress was very limited. So you're getting kind of two sides of the same story. But I'm interested, what do you guys think? So put it in the comment section. Do you think the conflict heats up over the weekend, or do you think the conflict resolves in the next week? I'm interested to see what you guys think. So write down heats up, or write down cools off, or kind of reaches a agreement. Me personally, if you're wondering, I don't know. I think they're going to make an agreement. Because there's so much military, so much US military around Iran. I don't think they will do something silly, okay? But you never know. Oil is flying, which is another. So oil right here is flying, which is another sign that, basically, conflict heating up. Usually how it goes, oil is very much impacted by geopolitics. Iran and the US are major players in the oil market, right? Especially Iran. So if something happens to the supply, you know what happens to the price. Supply disruption, price goes up. I think Nick has been buying oil right on this 20 MA. I think he bought here and he bought here as well. So had some awesome positions. Me personally, I do get a lot of questions. What are you doing about oil? What's your game plan on oil? I'm patient. It's so impacted by geopolitics. I don't have a lot of experience on it. Edgefinder is bullish. I have to say that. So US oil, Edgefinder printing a bullish reading, but for me personally, it's a very dangerous asset to trade, and I just want to stay away. So not my favorite thing in the world. To go for the watch list, so I have the position on the Nikkei. I exited the gold position. I'm out. Aussie dollar, and I look to re-enter. So gold, if we pull back to the 20 MA, and if the Edgefinder prints bullish, I'll look to re-enter, and I'll look to get in on my personal account as well. If we get a nice bullish reading on gold, if the conflict heats up, that's bullish gold. That pushes us into a risk-off situation, and that is bullish gold. So essentially, I want to buy on the pullback to the 20 MA. Aussie dollar, yeah, I want to get in, but it seems to be going up without me. Pound Aussie, flying lower. So no pullbacks, no Fs given, just a straight shot to the downside. I want to get in on a pullback. So let's see, GBP AUD. Bearish reading on the Edgefinder. As far as support goes, I don't know. This has been a massive flyer. This has just been melting lower. We are now at some pretty crucial support. This is pretty crucial support. So 1.89, pretty significant support level. You have this low right here as well. So yeah, that's that could be a bit of a bounce. If we do bounce up, if we do go a bit higher, well, that could give me an opportunity to get in. If this happens, we hit the 20 EMA. Yeah, I think so. I think that could be all right. So that's the watch list for today. Nothing fancy. Same old stuff as I had for the whole week, I would say. Looking at USD JPY, not much happening there. Looking at the stock market seems to be selling off a little bit, but not much. Dow seems to be selling off definitely. Russell flat. The DAX holding up nicely. The DAX is actually holding up quite well. So the DAX looks fine. If we go into all-time highs, I would be pretty interested to look for buy setups on the DAX. So I'll have to consider this. I have the alert set, and if we do print a bullish reading on the edge finder, that would be pretty nice. If we get a bullish reading right here, that would be really, really nice to buy the DAX. Bitcoin flat right there. Ethereum flat as well. Oil we mentioned crushing higher. Okay, is anything moving in a crazy manner? Silver actually doing pretty well. Silver is actually flying today. It's above the 20 EMA, starting to become interesting. My favorite is still gold. If I get an opportunity, I would still pick gold over silver, but silver is starting to improve as well. Nice to see, definitely nice to see. I'm gonna post the link to the form for the giveaway one more time. So check out the comment section, go to the form and fill it out. You'll get entered into a 10K one-phase DNA account giveaway. So let's see the comments. Let's see the comments. Raging Fire, hello, I'm doing pretty well. Watch out on Iran this and next week, guys. Definitely do. Hello, Sluggy. Cycling Club, welcome. Azen is I am USD JPY. I am Batman or Spider-Man. I'm not sure which one has the quote. I'm Batman, I think that's the quote. So USD JPY. Personally, not my favorite thing in the world. Dollar is catching a bid. Yen, I think, is going to be stronger long term. I think the yen could catch a bid. That means both currencies are strong. So both the dollar and the yen. That doesn't give you a clear edge. If we look at the reading, it's probably going to be neutral. Actually getting a bullish reading. Okay, interesting. Personally, I'm neutral. If we do climb to 159 or 160, I'll be selling because that's the intervention level. But if we drop, yeah, I'm not going to do much. So USD JPY, I don't have a massive edge on UJ and I'm staying away. Joshua, I'm doing pretty well. Welcome to the stream. Sluggy says heats up. Trump bring the biggest military presence in history around to bring it back. Sign stupid deal with Iran. I don't think so. You could be right. Trump definitely has a huge ego. So bringing the whole military there and then just spending the fuel to get them there and then bring them back, he may not like to do it. He may want to actually attack. Of course, the US loves attacking countries, especially countries that have a lot of oil. But that's a topic for another video. So you may be right. Iran can't go down without a fight. Trump always chickens out, but he'll never bite. Yep, that's the taco trade. So taco trade, Trump always chickens out. But that may be only to Western countries. When it comes to Middle East, when it comes to Venezuela, he may not chicken out. We're going to have to see. Because Western countries, those are his friends. You know, it's all the same elite that Trump comes from. But Middle East, Venezuela, countries like that, he doesn't really give an F. The taco trade for this particular event would probably be to buy gold into this, like I did, you can say, and then sell it right at the peak of the euphoria or the craziness. Not euphoria, but the craziness. Or you could maybe sell the stock market, or you can buy oil, absolutely. A great taco trade would be to buy oil into the conflict and then sell it, or into the heat up and then sell it if you can time it right. So sell it just before the resolution, because if we do get a resolution, if they actually do reach an agreement, oil prices go down. Okay, so oil prices go lower. Right. Okay. Time for the giveaway. Let me see how many names we have. Today is the 27th. Not the last day of the month, but last trading day of the month. We have quite a lot of entries. Okay, awesome. Awesome. Great to see that. So let's copy the names. Oops. Just a second. Yep. Copy. We go to our famous wheel. And let's see. So, David or Nabil? Nabil C. David, you were first. Maybe next time. So, Nabil C, congrats on being the winner. I have your email. So, after my segment, I will email you with the code. It's a 10K one-phase account on DNA Funded. If you didn't win, but you're looking to expand your trading capital, definitely do check out DNA Funded. So this is my personal 25K two-phase account. It is not gifted by DNA. Usually when you have these promotions, the prop firms give away a demo account, but we wanted to do things in a more fair manner. So I'm actually buying these accounts. And if I do make anything, it goes into my pocket. And if I do lose, it goes out of my pocket. So I've had a pretty good experience so far. There's a big broker behind this firm. Anything that I needed got resolved pretty quickly. The support is pretty quick. The trading conditions are fine. And the best part about it is the price. So if you compare all of the kind of the best prop firms like FTMO, 5% or Z8 Markets, and you choose DNA, with the code A1Live, you can get 25% off any DNA funded challenge. And that's what makes DNA so good, because you get a reliable firm, and there's very little reliable companies in the space, but you also get a great price with the code A1Live. So 25% off. That is really good. It's tough to see that sort of a discount if you look at the reliable firms. Sure, if you look at the scammy ones, they're doing 50, 60, 70% discounts every day. But the point of those companies is to take your money and run away after 3 months. So A1Live, 25% off. Personally, I'm up 3.75%. I have a sell on EuroGP, sell on the S&P, sell on silver. And this account is purely traded by ChatGPT. If we go to the equity, it doesn't look so great at the moment, but still up. So still positive, and I'm trying to pass this phase one. Also, just a refresher. So I had a 50K account, also traded with ChatGPT. So passed phase one, passed phase two, and then unfortunately blew the funded stage. So I had to get another one. yeah, just if you want any updates on the challenge, you can also look at my YouTube channel. The channel name is Marcos Trading Journey, and there's a dedicated video for this challenge. Silver. Okay, we can repeat silver. What about Westpac? Not sure what you mean about Westpac. EU. Marco, after such violent move, prices correct higher or a larger pullback before it continues down? I mean, the correction is deeper. Yeah, that is true. So the market mechanics in most assets is a slow trickle higher, but when the drop happens, it's like this. That's also the reason why the VIX spikes up when there is drama. Okay? So the VIX spikes up higher when there is a massive sell-off on the S&P. The reasoning is when the S&P goes up, it's a slow move. It's a slow grind. But when it drops, it happens in one day. So the volatility explodes in extreme manner. Okay. I took profits today on the DAX, 3-hour trade. Awesome. That's great. That's awesome, Sluggy. So the DAX, I like it a lot. I mean, it's starting to recover higher. It's respecting the 20 MA. Money is definitely flowing into the Nikkei, into the DAX, into emerging markets, Brazil, Peru, into gold possibly. It is definitely not flowing into the S&P or the Nasdaq. So money has to go somewhere. Seems to be going in the DAX. Personally, I would wait for all-time highs. I may be a bit too late, but I'm pretty happy where I'm at because I already have a position on the Nikkei. So I'm not in a rush, if that makes sense. And I would love to get a bullish reading on the Edge Finder as well. If we do get a bullish reading, if the uptrend continues, then it's game on. What about JPY? We can touch on that. I'm surprised that A1 Trading is participating in oil when it's such a big geopolitical play. I'm especially surprised that Nick took 2 trades in it as well. Well, Nick has his strategy. He knows his edge inside and out. He knows the Edge Finder, it's inside and out. So he made a conscious decision with the probabilities in his favor, and it's paying out so far. So the first position he took was a pretty nice winner. Second position he took yesterday, I believe. He took it right on the dip. That one is flying higher. So I think he's playing the heat up. So he's playing both the Edge Finder, which is giving you a bullish reading, and he's playing the sort of the narrative heat up between the US and Iran. The longer that the negotiations take, the more oil will go up. So it's more bullish for oil because long negotiations means it's hard to reach a deal. And the harder that it is to reach a deal, the more chance there is for a conflict. Of course, a conflict is bullish oil because it messes up the supply. Okay? So the edge is there. The edge is there. You know, the best money can be made during times of crisis. It's a blood sport. I'm going to have to admit that trading is most of the time a blood sport because you're making money when there's some drama in the world. But events of crisis, wars, COVID, invasions, anything like that, it creates fear and panic. Fear and panic makes people do irrational decisions. And then traders can come in, do some rational decisions, and pick up the pieces to make profits. So that's how it goes. Events like these, events like this one, is what creates a lot of volatility, and volatility is what traders love the most. Aizen is long UJ. Can we go through indices? UJ is watching grass grow. Yeah, it is kind of boring. That's a very good point, Marco. He doesn't check out outside of Europe. Yeah, I mean, with Canada and with Europe, Trump is pretty taco. He always chickens out, but with Venezuela, he didn't chicken out. With Iran, he already bombed them when it came to destroying their nuclear facilities. So it's pretty likely he will do it again. Usually, how it goes with the US president, he can't touch the US, he can't touch the allies, which is Europe, Canada, and all of the developed countries. But what he can do is he can touch everyone else. So he can touch Venezuela, he can touch the Middle East, because that's just how it works. And I mean, Obama did it, Clinton did it, Bush did it. They all do it. All the US presidents do the same thing. They don't touch the US, they don't touch Europe, but they do a lot of drama around the world. Sometimes it's justified, sometimes it's not. I'm not a political expert, so I don't know much about it, if I'm being honest. Your voice muffles every time you spin the wheel. I guess it's because an added sort of source comes in. The wheel has a sound as well. Marco, you're so funny but true about Trump. Well, thank you. Trump is also a funny guy, but pretty tough to read. I mean, he's kind of easy to read actually, but he flip-flops back and forth so much that it becomes very exhausting to follow him. Aizen says, Marco, I'm up 3% this month on DNA 50K phase 2. Awesome. Congratulations. That's a great achievement. That is awesome. I'm really happy for you. What do you think about Aussie yen? Nick has been spot on oil. Yeah, Nick is doing really, really, really well on oil. Diddy did it. That's funny. Epstein was a trader. Yeah, apparently Epstein was like this crazy good trader with awesome results, but no one can find his track record. No one knows where he got the capital to trade with. No one knows the banks he was trading with. So essentially it was all fake. Someone obviously financed him, but this is not the channel to discuss those things. It's just super interesting. Americans never like talking about politics because they sometimes agree with the heinous things that the country does. I mean, I agree with some of the things that the US does. I like the US. I think it's a pretty good country. But sometimes they do some pretty crazy stuff, and you have to call them out. So it's all about being rational and keeping a rational mind. What else can we look at? You guys want to see the yen. There has been a lot of yen requests. So JXY. I don't know. I had my position on, if you have been following me, I had my position on the euro yen, which I sold the euro yen, but got taken out. That made me a bit uncomfortable. Not uncomfortable, but it made me a bit patient. So now I'm looking for the narrative to develop a bit more. I can see the thesis with the Nikkei is working well because the Nikkei is continuing to go higher. So the capital is definitely flowing into the Nikkei, into the Japanese stock market. The yen, not so much. We have had really flat price action lately. People are not sure. Will we get rate hikes? Will we keep the rate the same? The Prime Minister Takaishi, she wants to keep the rates the same. Governor Ueda, Bank of Japan Governor Ueda, he wants to raise interest rates. What is currently priced in is, with the BOJ, hiking of interest rates. So by the end of 2026, the interest rate should go from 0.75 to 1.25. That is what is priced in. So there's a bit of a battle. There's a bit of a tug of war. Takaishi wants neutral rates, while Ueda wants higher interest rates. Who will win? We don't know yet. If we get neutral rates, if the rate stays the same, yen goes down. Nikkei goes flying. If we get higher rates, Nikkei probably doesn't benefit, but the yen should appreciate. The yen should gain value. So I don't have a clear view at the moment, and I'm being patient. That's about it. I know there was Aussie yen. That was a request. So let's take a look at the Aussie yen. Aussie yen looks pretty nice. I mean, it's just rocketing higher. Aussie, by the way, is one of my favorite, most bullish currencies for 2026. Actually, the most bullish currency. That's exactly why I'm looking to buy the Aussie dollar and sell the pound Aussie. Aussie yen looks nice. I would not love to get in because, as I told you, I'm being patient on the yen. So if you want to do something with the Aussie, selling the pound Aussie on pullbacks or on rallies, I think is a pretty good option, or my favorite option. Aussie dollar looks fine as well. It may be a bit overextended, but if we do pull back to 695, I think it's a nice buy setup. So let's see. Last thing for today, because my time is up. UK 100. UK 100. The last rant for the week. Flying higher, looks great, looks really, really good. My main point, the current narrative for 2026 is new money is going into the UK 100, into the Nikkei, into the DAX, into gold, into Brazil, Peru, emerging markets. It's not going into the S&P. So that means you should focus on diversification. You should focus on these different indices, different markets, because the profits are definitely there. You can see the UK 100 absolutely flying. You can see the Nikkei absolutely flying. You can see the DAX doing okay. So much better to play this sort of price action, right? This looks much better, much easier to trade than what you have on the S&P or what you have on the Nasdaq. Think about it. If you want to know more about it, if you want to get all of my trade signals, definitely consider joining the A1 Discord. Link is in the description of this live stream, and you can use the code Marco to get 25% off. So I talk about this exactly and a lot more in the A1 Discord. This is about it from me. Good luck in the next week. Take a break over the weekend, recharge your batteries. Let's see what happens with the US and Iran. And yeah, I wish you all a great weekend, and congrats to the winner of the giveaway. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.